Before you're able to come up with any system that works in Forex, there are 4 things. Even though many people, when I check on YouTube, when I check on Google or on the internet, people talk of 3. But there are 4 types of analysis which you have to be able to combine to come up with any system that can give you money in Forex. And that is what we're going to be covering on today's video, which is the 4 types of Forex analysis. All right. Hello everyone and welcome to my channel. My name is Godlove. On this channel we talk everything about trading, business, personal finance and tips to help you stay profitable as a Forex trader. So if this is your first time coming to my channel, please hit the subscribe button below to subscribe to the channel and also leave a thumb up on the video so that you can always be updated when I come up with content like this. On today's video, we're just going to go straight to the point. We're going to be talking about the 4 types of Forex analysis. In Forex trading, if you check on the internet, everywhere on YouTube or even on Google, people talk of 3. But those 3, according to my own years upon years and experience in Forex trading, I've discovered that there are 4 types of Forex analysis that you need to be able to combine. You can, three of those analysis cannot work without the other one. So they work hand in hand. You need to be able to understand all the system. You need to be able to understand all the types of analysis to be able to make money in Forex. There's no doubt about that one. Okay. So if you have a system that is still failing you to today, then maybe one or two or more of this type of analysis is lacking in your system or in your strategy. The first one we're going to cover is just what we call technical analysis. Everybody knows technical analysis. Technical analysis is the most popular that people use on the internet. Talk of demand and supply, support and resistance, top, bottom, head and shoulder. Technical analysis. We'll talk about fundamental analysis. We'll talk about sentimental analysis. Knowing about technical is not enough. Knowing about fundamental is not enough. You need to be able to understand the sentiments of the market. We are all humans, and human behavior itself plays a big part when it comes to Forex trading. Plays a big part when it comes to Forex chart. So we'll also talk about that. All right, and you see this course is in line with our previous video. If you didn't watch a previous video, then maybe you won't understand this one that much. Then you need to go back and watch our previous video, which we're talking about the different types of charts in Forex. Now we're talking about the different analysis because we're moving from chart now to analysis. How can you analyze those charts to be able to make the money? Because the money will come from those charts. The money will come from those bar chart, from those candlesticks, from all of that. So how do you analyze that chart? That is what we're talking on today's video. So all the videos are linked together. After that, we'll also talk about situational. This one is, you won't see this one anywhere. You will see this one only on Godlove's channel, or you will hear this one only from Godlove's mouth. All right, you wouldn't hear about situational analysis or situational type of Forex analysis in anywhere on YouTube or anywhere on Google or anywhere on the internet. You only hear from Godlove's mouth because it is out of experience that I've been able to include this one. All right, it will make sense when I'm able to explain it to you. That's why you see what you have been missing. Let's start with technical analysis. All right, the few points we'll just take when it comes to technical analysis. They say a technical trader, if you want to call yourself a technical analyst, all right, remember I said you need to be, before you become a profitable trader. On my channel, I teach you how to become a profitable trader, not only a professional trader. You can be a professional trader, but not a profitable trader. A profitable trader is somebody who, profitability comes with consistency, while professionalism just comes with knowledge. As soon as you have knowledge about anything, you become a professional on that thing. But before you become a profitable Forex trader, it comes with consistency. All right, so profitability only comes with consistency, and that is why I'll be able to develop some of these strategies and some of these concepts that you won't see anywhere on the internet. The first one you see, they say a technical trader uses historical data. I like this. Uses historical data to determine the present and the potential future price. I like this word. What the key word when I come out with any definition, make sure you pick out the keyword. A technical trader uses what? Historical data. Because everything is on the chart. You can see here it's on the chart. This is a candlestick chart. Everything is on the chart. The person can be able to see past support and resistance level, past key level, past demand and supply level. So the person is able to see everything Because a technical analyst will tell you he can see everything on the chart. He can see the levels the market is going to go. He can take his trade. So everything for a technical trader is on the chart, nothing more. So a technical trader, if you want to say you only train with technical analysis, then you are somebody who uses historical data to determine the present, and the potential future price. Because trading is a game of probability. You can't know the future movement, the future price level, or you can't know the future price movement for certain. All right, nobody knows. It is a game of probabilities. When you have your system that you've tested years upon years, you always say you're making money with that system when the probability of that system making money is more than the probability of that system losing money. Because there is no system or no strategy that won't lose, all right? There is no system or no strategy that you won't place a losing trade. But now, what keeps you on the edge, what makes you a profitable trader is when that system or that strategy gives you more winners than losers, all right? That is why I'm talking about you having a system that enables you to know the potential future price. Because you can't know for certain, it's your system that is able to give you rules. You have a set of rules that you follow. You have a simple set of disciplinary rules that you follow. That anytime you break those rules, you'll be able to pay a price for those rules. That price can be your account balance. That price can even be your emotions. We've already spoken more of that on our previous videos, but now we're talking about a technical analyst, and we've already spoken about a technical analyst. We say somebody who uses historical data to determine the present and even the potential price of any particular currency. Another key point we can still know, the technical analyst or a technical analyst is also called a chartist. All right, a technical trader or a technical analyst is also called a chartist because they do everything on the chart, or they do all the analysis on the chart. So that is why they call the chartist, and all information, they believe all the information is on the chart. Technical traders believe on the phrase, history tends to repeat itself. It's true. This is very true, because if you check on your chart sometimes, you open your MT4 and your MT5, you see what we call demand, and you see what we call support and resistance. Those support and resistance, they just represent historical lines. And if in most cases, 90% or 80% of the time, if a market already forms support, let's just take something like this. All right, the market is bouncing here. If the market already forms support here, resistance here, support here, resistance here, there's a high probability that the market might still form another support here. All right, that is what technical analysts believe, that history tends to repeat itself, because history already shows you that there was supposed to be a support here. History already shows you that there was supposed to be another support there. And when it came here, 90% of the time, there's a high probability that history might repeat itself and there will be another support here. All right, so that gives you an edge. That gives you the reason for you to be able to take that particular trade. That is why there was a video I made about a few days ago, which is on the channel. I think the title for that video was why you never make money in forex trading until you master this. On that video went viral. That video went viral because on that video I did explain of what we call the RES. RES just stands for RES. All right, I did explain what we call RES, and the explanation of RES, arrow stands for reason. All right, arrow stands for reason, and E stands for the entry. The T stands for your stops, and the T stands for your target. All right, for your target. Any forex strategy, any strategy that you have in forex, you can. You can add your guard. I don't know how. I can emphasize this, all right? But any strategy that works in forex must have these four things. I call it REST because the four letters REST. I call it REST. Any strategy that works in forex, no matter whether it's a fundamental strategy, technical analysis, or what, it must have these four steps. The first thing the strategy must have is a reason. The reason for you using that strategy, the reason for you taking that trade. Maybe the reason for you is okay, there's a particular fundamental that is supporting the fact that currency will be high. So that is the reason for you taking that trade. What is your entry? Maybe your entry, you're waiting for a double bottom or double top, or for the market to test a particular resistance or support. That is your entry. After you've known your entry, what are your stops? Where do you want to put your take profit? Where do you want to put your stop loss? Are you going to be using trailing stops? That is what they call stops. Where will you put your stops? Target. Okay, what is your target for that trade? How much are you willing to risk on that particular trade? How much are your target? How many pips? How many pips stop loss? How many pips take profit? How much will you be able to risk to say, okay, if the trade doesn't go my way, I'll walk out and I'll be totally fine. That is what they call RES, which is reason, entry, stops, and target. We've already spoken about that on our preview. If you didn't watch that video, then please just stop from here, go back and watch that video before you come and continue watching this video, because that is very, very important. That was the reason why the video went viral, because of these things which people didn't know, this secret which people didn't know. All right, so we've been talking about a technical analysis. All right, a technical analysis. Somebody would trade with technical analysis. And another point for a technical analysis, they say they tend to look for repeated or similar patterns. We've already spoken about this. They tend to look for support and resistance, double top. So they look for repeated patterns. All right. Then no certainty is guaranteed, since trading is a game of probabilities. I have already mentioned that. There is no particular system which is guaranteed. Why? Because trading is a game of probabilities. You work with probabilities. Then some uses tools like moving averages, Bollinger Band, or Fibonacci to better ascertain their decision. So for technical analysts, even though they say everything is on their chart, but for them to be able to support their ideas, sometimes they use some indicators to be able to give. Maybe if they are talking about the bullish market, they might use some moving averages that tends to give them more information or tends to support their idea about that particular market. So with that being said, let's go to the next type of Forex analysis, or the next type of Forex analysis, or the next type of chart analysis that we call fundamental analysis. We've already spoken about technical analysis. A technical analysis is just a trader that uses historical data to determine the present or the potential future price of any particular currency. Now we're talking about fundamental analysis. Fundamental just stands, a simple form for fundamental just stands for news. All right, fundamental just stands for news. So for a fundamental trader, I will have videos on my channel, many videos that will teach you how to trade the news, how to trade with fundamentals. But now let's see what they say. Fundamental traders uses economic, social, and political factors to predict currency prices and potential future movement. As simple as that. So you see, they say fundamental trader uses economic, social, and political factors to predict current currency prices and potential future movement. That is why when we're talking about fundamental analysis, that is why here we have the globe. All right, we have our globe right here, because with fundamental, as a fundamental trader, as somebody who trades with fundamental analysis, you need to be able to have an idea about what is happening globally. You need to be able to have an idea about what is happening in the United States if you want to trade the United States dollar. You need to have an idea about what is happening in South Africa if you want to trade the South African rand. You need to have an idea about what is happening in Egypt if you want to trade the Egyptian pound. You become somebody very global. All right, because as a fundamental trader, you uses the political, social, and even the economic factors of that particular economy to determine the current price or the potential future movement of that particular currency. Here we also say fundamental traders need to know. You must know. If not, you shouldn't call yourself a fundamental trader. Fundamental traders need to know the degree of the fundamentals on any particular currency, because on Forex or in Forex trading we have different fundamentals, and each fundamental is having a particular degree when it comes to that particular currency. All right, let's take something like the United States dollar. If we take something like the United States dollar, NFP, we have something we call NFP. NFP is the biggest news. NFP is the biggest news when it comes to Forex trading. So if you check on your MT4, and you actually go on your MT4 and you see when NFP is released, you see the chart becomes very, very volatile. All right, the chart is very volatile as opposed to other news like CPI, GDP, or manufacturing PMI. So you see, so different news or different fundamentals have different degree of impacts when it comes to a particular currency. So as a fundamental trader, you need to be able to understand the different fundamentals that affect that particular currency, and also understand the degree of impact of that particular fundamental to that particular currency. All right. Then the last point, they say fundamentals like NFP, CPI, GDP, and employment data are very, very volatile, and they tend to impact currencies more than other minor fundamentals. If you want a video that teaches you on how to trade fundamentals, go through my channel. Everything, any word that comes out from my mouth, there's already a video on my channel that explains that particular sector very well. Talking about fundamentals, there is already a video on my channel that even shows you guys how to trade the NFP, how to trade the GDP, how to trade other fundamentals, and to trade it on the live account, because I made all those examples on a live account with my live money, risking my own money. Let's go to the next point, which is what we call, before we even go to the last one, this is very important. This is very important. I know you are enjoying the video. I know you are gaining a lot of wisdom from this video. I know you are gaining a lot of secret from this video. So please, the only thing I just need from you, leave a thumb up on this video. Let's get the news out there. Let's help many people who are lost. Let's help many people who are lost in Forex trading to be able to find their ways. All right. So the more we leave, the more thumbs up we leave on this video. The more thumbs up we leave on this video, the more many people are going to know about this. And if you're watching and you haven't subscribed, do yourself a favor and hit that subscribe button as hard as you can to subscribe to the channel, so that you can be able to follow us on this journey. All right, so like and subscribe the video. All right, so with that being said, let's go to the next point, which is let's go to the next one, which is sentimental analysis. I don't want you to get out of track. Don't get out of track. We are talking about the 4 types of Forex analysis, or the 4 types of ways you can be able to combine to better become a solid Forex trader. Now we are talking about, we've spoken about technical analysis. Now we just recently spoke about fundamental analysis or news trading. Now we are talking about sentimental analysis. All right, sentiments. Now we are talking about human behavior. We are talking about individual traders' behavior. All right, under sentimental analysis, they say this is trading analysis based on individuals' judgments and sentiment. As simple as that. As simple as that. My judgment might not be the same as your judgment. Your reasons for getting into the trade might not be my reason for getting into the trade. But the most important thing is, at the end of the day, we should all come out profitable. All right, I don't care if I'm pressing buy and you're pressing sell. I don't care. You have your own reason for pressing sell. I have my own reason for pressing buy. What would distinguish us between the losers and the winner will be who will come out at the end of the day with money in his pocket, or who will come out at the end of the day with their account balance, or with the trading balance still on the same level, or with the trading balance still safe. That is what will matter. Because individuals, as humans, that is natural. We can't fight that. As human, it is on our genetics to actually sometimes even fight our own intuitions. All right. So that is what we call sentimental analysis. And they say this is trading based on individual judgment and sentiments. Sometimes I can just open my MT5 and just seeing a particular currency based on my experience and my expertise. I will know, my sentiments will tell me that this currency won't go up, or this currency is not a good trade, or my sentiment will tell me that this is a good trade for me to buy, this is a good trade for me to invest, to even go high on that particular trade. That is what they call sentimental analysis or sentimental trading. That is what they say. Every trader, see what they say. They say every trader has his or her own perception and reasons for the market direction. I've already spoken about that. And that is the same thing. That is why you see, when we're talking about sentimental analysis, you see this machine in the human brain. This same system will be different from my system will be purely different from your system. Your own system will be purely different from my system. That is why they say every trader has his or her own perception and reason for the market direction. Another thing they say, it is always advisable to do what the 90% of retail Forex traders are doing. No. There was a problem on this. They say it is always, let me put it in a way you better understand. The Forex industry, there's a video I even made that was called the 90-90-90 rule. And that 90-90-90 rule states that 90% of all Forex traders blow their entire account in the first 90 days of trading. That is what they call the 90-90-90 rule of trading, of Forex trading. And that is the industrial standard when it comes to Forex trading. 90% of all beginners blow 90% of their entire account in the first 90 days of trading. That is the same thing I'm saying here. So since you already know that in your mind, you already know that 90% of people are going to blow up their account. There are sometimes I even go on website, I see some brokers, they'll even put a chart that shows you the total number of people who are actually buying that particular currency, the total number of people who are actually selling that particular currency. So some people will go there and they instead copy those figures. If they go and see that the high percentage of people are buying, they will go and buy. If they go on that website and they see that the high percentage of people are selling, they will sell. That is the highest trap. That is the highest loophole somebody can use to trap you as a Forex trader. Ask yourself, 90% of beginner Forex or 90% of retail Forex traders blow up their entire account. So if you go on those websites and they show you percentage of people, higher percentage of people who are buying, and you are buying, it means you are following the crowd. It means you are following those 90 people who will end up blowing their account, and you won't be. You will just be another statistics. All right? It means you are following them to just be another statistics. So what I'm advising you in Forex trading, if it is possible for you to instead do the opposite of what the majority is doing, that is what will make you money in Forex. All right, in Forex trading, if it is possible for you to instead do what the majority, what the 90% of people who all blow their account are doing, if you can instead do the opposite, then that is what will put you on the 10% of Forex. That is what will put you on the same spectrum where I am today. That is what will put you on the same spectrum of Forex trader that actually make money in Forex like us today. All right, so don't follow the crowd. It becomes a point where you can stand alone and stand firm. All right, than to follow the crowd and instead blow up the entire account, or follow the crowd and instead lose all your money. That's what they say. It is always advisable to do the opposite of what 90% of all retail Forex traders are doing, because they will advise you. If they are talking about support and resistance, they're talking about the particular level. If let's just say we have our chart here, and the chart has been bouncing on support and resistance, immediately the chart is here at the resistance. People already know, in short, 99% of people already know that, okay, there's a high probability that the market is going to bounce somewhere here. So everybody, even your broker already know very well that you, when the market comes back around this particular level, you'll be buying. So if they are trapping you, they know very well. Immediately the market come here, the 90% of the people don't buy. But what the 10% of people like us do, people who are actually making money in Forex trading do. Some of us, when it comes here, there are factors that we use that will tell us to instead wait. For you guys, for most losers, or for most beginner Forex traders, or for most retail Forex traders, to put in what we call dumb money. All right, so at this particular level, you guys will pump in. Many people, you guys will pump in your dumb money. You pump in the dumb money. I'll tell you, that's why here I tell you guys the bitter truth in Forex trading. That is how the industry works. So at this level, you people will pump in your dumb money. You buy. Many people, 90% of the people buy at this particular level. Immediately they buy at this particular level, what will happen? Brokers will do what they call stop loss hunting. They'll trigger. They might take a market against you, maybe 15 pips, 10 pips. All right, when the market has gone against you for maybe 10, 15, they will knock out all those positions. When they knock out all those positions, they increase liquidity. There be more liquidity will flow into. When there's more liquidity, volume is increased. At that particular level in point, we have also system that will tell you, okay, this is time to jump in. You jump in at that time and you take your profit, which is what I'm going to teach you on my channel. So don't be frightened. By the end of this course, you'll be able to see what I'm explaining. You'll be able to understand what I am explaining. All right. The money in Forex trading will never get finished, but what will get finished in Forex trading is people who have the ability to think big, people who have the ability and the endurance and the perseverance to study or to gain some knowledge when it comes to Forex trading. All right. So with that being said, let's go to the last one, which was discovered by Godlove. All right. This one was discovered by me. You won't see this one anywhere on YouTube. It is called situational analysis. A situational analysis. The reason why I came up with this one was because I was somebody who was very fond of keeping a journal of all my trades. All right, I was very fond of keeping a journal of all my trades. Anytime I take a trade, I'll go back. If it is a winner, I'll go back. That's why you see I have books like this. I have more than 5 of this. You see, as big as this one is, I think 2017. You can see here, it says 2017, right? I have more than 10 books of this type that if you check inside, it is only note about Forex. Any trade that I take, if it is a winner, I'll put reasons why that trade was a winner, reasons why it turns out my target, and if it is a loser, I do the same thing. So with time, after doing that consistently, after doing that, I was able to see different patterns, all right? I was able to see different patterns that work. So that helps me. Keeping a trading journal was able to help me to avoid some mistakes. So my winners, I study my winners to be able to make other trade profitable. So it might sound very ironic, but I studied all my losers. I studied all my losers to be able to make profitable trade. And it is from there that I came up with situational analysis. Situational analysis is just for you, okay, before you take a trade, you even ask yourself, this particular currency pair that I'm trading, the last time I took a trade on this particular currency pair, how did it go? If it was a winner, what happened? What were my target? All right, what were my target? How did I get into the trade? How did I get out of the trade? Did I scale into the trade? Did I scale out of the trade? Did I use trailing stops? So you analyze the situation. That's why I call this situational analysis, and that's why they say this analysis tend to utilize the trading history. All right, this is very important. This analysis tend to utilize the trading history. The trading history and experience. This analysis tends to utilize the trading history and experience of an individual trader to be able to understand the present market condition and to predict the future price movement in any market. All right. So as easy as that. So it tends to use what? It tends to use the historical. It tends to use trading history. Trading is more like technical analysis, but with technical analysis, you are already using information which is there, which everyone can see. Everybody can read that information. But with trading, with sentimental analysis, you use trading history and experience. You tend to use trading history and experience. These two things, trading history and experience, for an individual trader. Because my own trading history might not be the same like your own trading history. My experience might not be the same like your own experience. That is why you see situational analysis becomes subjective. All right, it becomes subjective to different individuals because of different individuals have different degrees of experiences and different degrees of trading history. So here you can say you use trading history and the behavior of certain currency pairs. So just like I was saying, if you want to trade gold, ask yourself, the last time I trade gold, how did it turn out? So you'll be able to see some occurrences, all right? Then the impact of certain news events. Maybe the last time, if I'm talking about trading something like NFP, the last time I traded NFP, which pair was the best? Which pair acted very well? Which pair did I make a lot of money? Which pair almost blew my entire account? Which pair almost made me broke? So I'll be able to use my situational analysis to better come up with those situations. Then past pains and joys. This is very important. That's why I say the past pain and joy. So if the past pain and joy just is the same like saying you analyzing your past losers and your past winners. All right. So that is why I call the past pain and the joys, because it is through your past pains that you'll be able to learn more lessons that will help you on more profitable trade. It is through your past joys, your past winners, that will be able to help you or give you that edge to be able to learn more strategies that will keep you profitable. All right. So that is that about situational analysis. You see how situational analysis is so important. For me, if I even come to the 4 types of Forex analysis, situational analysis for me comes for the first, because I always want to learn from my mistakes. I always want to learn from, if I make mistakes, I always in life. That is why you should never call yourself a failure, because if you take risks and it doesn't work out, you're going to learn a lesson from it. And if it works out, then you win. It's the same thing in trading for me. In trading, it is either I win or I learn. I don't lose. I can't say I've ever lose any trade in Forex, because anyone that I've lose, I've learned a lesson from it. So in trading, I either learn or I earn. If I place a trade and it doesn't work out, then I'll learn from that particular trade. If I place a trade and it works out, then I'll earn from that particular trade. So understand this: in trading, I either learn or I earn. That is the same thing with situational analysis, because this helps me to be able to build my trading archive, to be able to build my strategies from past experiences, from past pains and joys, from trades that work out, from the ones that didn't work out, from the news events that work out, from the news events that didn't work out. Talking about news events, I've given people on my channel, there's a video that I've given particular news events that I've been trading for more than 5 years. News events that have worked for me, that I've been trading and making money consistently. I show even live example. That is an example of a situational analysis. All right, so that is very, very important. This should be the first time you're hearing about situational analysis, and the first time you're going to be implementing another key ingredient, another key catalyst into your trading journey, which is going to catalyze, which is going to catapult you to another level. All right, so with that being said, let's see what we have. So the balance between all this, you can see here with the balance, we just have something here that have the 4 system, and the balance, they say combining all the 4 market analysis types will enable you to better make an informed trade decision. So none of this, remember I said I've already explained the 4 types of Forex analysis, and none of this analysis stand on its own. They all go as a pair. All right, so it's like a chair. It's like a chair that is having 4 legs. All right, let's just say this is one leg of the chair, this is another leg of the chair, this is another leg of the chair, and this is another leg of the chair. Without any of this leg, this chair won't be supported. All right, this chair won't be supported. So this one can stand for maybe price analysis. This one stands for price analysis. All right, this one stands for not price analysis, sorry. This one might stand for the first one, which was technical analysis. The first leg of the chair, the second leg of the chair may stand for fundamental analysis. This one might stand for now, the third one was sentimental analysis. And the last one stands for what? Situational analysis. So all these factors, all of these constitute a strong and a firm Forex trader. A strong and a firm Forex trader who can stand and boast that, okay, I know I have a high probability for taking this trade. And if it doesn't work out, I know that I did my best and I had everything that was supposed to make that trade to be a winner. So the best advice I can give you, have an idea about all of these 4 Forex analysis that I've been able to explain. Have an idea about all these 4 and be able to use them in your trading. Let me give you this scenario. All right, let me give you this scenario. Let me tell you how dangerous it is if you have an idea of one. If you have an idea, let's just say of technical analysis, but you don't have an idea of fundamental analysis. All right, let's just use that as an example. Let's just say you woke up one day and you open your chart. You open your chart for, let's just say you are trading USD Japanese yen. All right, you saw support and resistance. Support and resistance is what? Support and resistance is under let's just put this technical analysis. Technical analysis is here. All right, this is technical analysis and this is fundamental analysis, right? So support and resistance is under what? It's under technical analysis. So you saw support and resistance, it was so the chart was very clear, and as a chartist or as a technical analyst, you say, okay, you don't want to focus on fundamental analysis, you don't want to focus on sentimental analysis, you don't want to care about anything that is happening on this place. So you go ahead and you place your trade. You were so happy and you place your trade on USD Japanese yen. All right, we are using USD Japanese yen as an example. USD Japanese yen. That is a currency pair we are using as an example. So you go ahead and you buy. You press a buy on this particular currency pair without taking into consideration fundamental analysis, sentimental analysis, or situational analysis. This is what happened. After pressing your buy, you were so happy, you even took a picture of it, you were happy, you posted it on Instagram, even made a dance and posted it on TikTok and stuff, because you knew that this trade was going to turn out. This trade was going to be a winner. Without knowing that, okay, at the same point you place that trade, there was, maybe you place that trade at the opening of the market when there was NFP. Let's just use NFP as an example, right? When there was NFP, and NFP stands for non-farm payroll, and it measures the total number of people employed in the United States out of the agricultural sector. All right, so the non-farm payroll, the data came out. When the data came out, it was negative for the United States dollar. So at the same time you place that trade and you were still dancing and maybe even playing your PS, at the same time the fundamentals for the United States came out, which was NFP, and that NFP came out and it was negative. Since that NFP was negative, before you even came up 2 minutes or even 5 minutes before you came back to the office, or before you even came back to your computer to check, your account was already on zero. So maybe you're even trading, so before you even came back, or that trade was already closed. Before you came back, that trade was already closed. Or maybe if you were over leveraging, or you were not using proper risk management, your account was already even on zero. Why? Because you neglected fundamentals. You neglected the aspect of fundamental. You failed to understand that at that same point you were using technicals to place that trade. There could still be a possibility that there was a fundamental news that could affect the same currency pair. So as a good and a solid Forex trader, what were you supposed to do? At the same time you were still thinking of placing this trade. Let's just say, okay, as a good and a Forex trader, as a good solid trader who is using all of this, at the same time you wanted to place that trade using technicals, you would have gone to maybe investing.com or any news website you are using. You would have gone to maybe investing.com. Let me make my chair to be clean because this is very important. At that same point, maybe you would have gone to investing.com to see that there's a major fundamental or there is a major news coming up that will affect that same currency pair. Because remember, we're talking of United States or Japanese yen. So maybe you would have gone to investing.com to see that there's a major news coming out. And since you saw that there was a major news coming out, what you would have done is you stay away from the market. You wait for the news to be released. When the news is released, you either see if the news is pushing the market back to that same support that you wanted to buy, or the news is pushing the market even back to the particular resistance where you either trade reversals or you look for a breakout. That would have still been a system that you use. If you are somebody who is using all the 4 types of chart analysis or all the 4 types of Forex analysis, that will be able to help you. You see, that would have secured your position because fundamental analysis will show you very clearly that there is a particular news coming out. This is not a good time for me to buy this particular currency pair, or this is not a good time for me to sell this particular currency pair. All right, good. That is that about fundamentals and fundamental analysis and technical analysis. On the side of sentimental analysis, maybe even maybe at that particular level you even go to some website. Even some brokers used to even broadcast. They used to even send a broadcast to maybe their traders, brokers that want you to lose your money. They used to even send broadcasts. They say, okay, NFP is coming up, let's try to trade. They will ask you to trade NFP. Why? Because they know very well that because of your lack of experience, NFP is going to blow up your account. And when NFP blow up your account, that money will go to them as their OTC gains. That money will go to them as their over-the-counter gains. All right. So Sentimental would have even still tell you a question, ring a bell in your head. Like why are they telling me to? Why is my broker forcing me to trade this news? Why is my broker on my neck that I must trade this news? It would have still helped you to stay out of that trade. Now Sentimental, now Situational, which is discovered by Godlove. You won't see this one anywhere. Situational analysis will now help you. You'll be able to ask yourself, the last time I placed a trade without checking my fundamentals, the last time I placed my technical trade without checking my fundamental, my account was almost blown out. The last time I placed a trade without first of all waiting for news to be released for me to take an action after, I almost blew my account. Or if you're somebody who have already watched my videos and you've already watched strategies that teach you on how to trade news, you know that, okay, at that same level, last time when NFP was coming out, I went through Godlove's channel and I saw his strategy of news trading, and I was able to place my stop at this level. I was able to do this, and I came up with a big profit. I came up with a big profit that I was even able to buy myself even a car or something. So that is situational analysis, using past history, using past trading history and experience to better determine the present price and the potential future price of different particular currencies. All right, so you can see how do you even draw somebody who sit on a chair. I want to draw myself sitting on this because good. So you can see now I can sit and relax. I can sit and relax because I know I've given you guys the fundamentals, the 4 pillars. All right, the 4 pillars of any solid forex trader. Before you call yourself any solid forex trader, you must be able to utilize these 4 pillars. 1, 2, 3, 4. All right, you must be able to utilize these 4 pillars of forex analysis, which is technical analysis, fundamental analysis, sentimental analysis, and situational analysis, to better maximize your profit and to avoid the mistakes that 99% of forex traders will make. And once you avoid it, when you're able to avoid these mistakes, you won't be able to blow 90% of your forex trading account in the first 90 days of trading. So with that being said, if you've gained some knowledge from this video, which I know you have, please leave a thumb up on the video. That means a lot. Please leave a thumb up on the video. And if you are watching and you haven't subscribed to this particular point, hit the subscribe button to subscribe to the channel so that you can always stay informed once I come up with content like this. And if you want a broker that will be able to, that is friendly, good spread, easy and electronic communication network that wants you to win all the time, there's a link below. And if you want to join a community of forex traders that share ideas on a daily basis, then also join my Telegram channel, which the link is on this video. Until then, I'll see you guys on another video. Peace.